Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading.
I wouldn't say that they did in the same way that the U.S. did.
Right.
I think it's probably a much smaller scale. I think they're suffering because, and will probably continue to suffer because their marketplace is kind of drying up, right? I mean, the world's consumers are kind of pulling back.
Right.
And as an exporter, I think that's the major factor I would throw out there is that just traders are trying. The reason why they're driving down the Aussie so bad is because I think that they see a much longer term bottom, if not decline, in demand out there, and that's going to really impact profitability and income in Australia as a big exporter.
Okay.
Yeah, I wouldn't be surprised at this point. I'm definitely not betting on a stronger Aussie. I would be shocked if we got a big rally on the Aussie anytime soon.
And Chris has a question. Says, is that? I'm sorry, just scrolled through. If that's the case with the lack of demand, it should be killing the Kiwi. We don't trade the Kiwi at the ISE, but I'm sure that's exactly what's happening, John. Right? Kiwi's probably down even more.
I would say that. Yep, I would say that. I would probably say that that's probably one of the major factors with all of the commodity currencies, which we usually wrap up as the Kiwi, the Aussie, and the Canadian dollar. I would say they're all. That's one of the things that's just slapping them in the face right now. Is the fact that traders and the population at large sees demand as dropping, and that's going to really hurt them as big exporters of raw materials specifically. I mean, that's a big one that's going to hurt them. I think lots of times traders will look at even demand for oil as a big indicator for the future of the Canadian dollar. I don't think we've gotten anywhere near the appropriate adjustment on the Canadian dollar to account for how bad oil has come down.
Oh, wow, that's interesting. So you think it's going to 120 or above on the ISE number, the CDD?
That's right. Yeah,
CDD,
I think right now, yeah, it's out of the money calls on CDD are really interesting to me right now, just because I think there's a lot of volatility coiled up in there, and if we continue to see disruptions in the oil trend, that's exactly where that's going to get reflected in the currency market.
Wow, that's interesting you say that, John, because if I look, and I guess I gave a prelude early on saying that the British pound, Canadian dollar, euro, and Swiss are all trading around the same vol. You seem to have a little more of an opinion that the Canadian could make a sort of a spike. Then if that was the case, the Canadian dollar options are cheapest relative to those other three. The
I would
pound,
agree with that. Yeah, I would agree with that. I think it's I think it's particularly sensitive to that oil boogie monster. It's just everybody knows that oil is that we have not seen the end of oil volatility. Up or down. But probably down. As things continue to kind of trend worse, that's gonna affect the Kiwi or the Canadian dollar in ways in which it wouldn't affect the pound or the euro in the same way. Not even close.
Right. Their costs for getting the oil out of the ground must be much higher, right? They're doing all that exploration in Western Canada, and that cost must be very, very high, I'd assume, right?
Yeah. In my experience, talking to guys up there, that's what I hear all the time. And I also hear that a lot of their reserves are, a lot of the oil they've got in the ground is still actually too expensive to extract. A lot of the tar sands and stuff like that is, even with oil prices, just briefly spiking into levels that it would be profitable to start extracting it with today's technology. So I think that they've got thin margins. I mean, all of those guys, it is thin margins. It all comes down to quantity. How much can you sell? How much can you ship? And and what's demand out there? And so they're going to be very sensitive to that. And right now, everybody's competing on energy prices with a dwindling market. You're going to get, I think, you're going to get a very sensitive loonie to that.
Wow, that's a really excellent point. Paul has a question about, I guess this is to me, John. Spread on the ISE currency options is great for gamma scalping. Well, I think the spreads on just about all options have widened in the last 2 or 3 months because the markets are now riskier. That's just the way it goes. More risk. Market makers are going to charge a little bit wider bid-ask spread. But I think if you take a look at the bid-ask spreads, they're very, very reasonable. Maybe, I don't know, 4, 5, 6, 7 cents. if you're holding this and you're scalping against a spot account, and you're buying it a couple months out, I think that you could do some fabulous gamma scalping, of course, depending on which pair you trade. And if John's right, and if the Canadian's going to go even crazier, then that's probably the way you want to go. But obviously the Australian options are the most expensive because the dollar Australian has moved the most, but the dollar Canadian's moving a lot, at least recently, just as much as the euro or the British pound. And if you think it's going to move more, well, then those options are probably cheap. That's the way I always teach options is it really doesn't matter what necessarily happened in the past. If you're buying an option, you think you're going to have more volatility in the future. And if you're selling it, you really think there's going to be less volatility in the future relative to today's price. John, let's take one or two more questions, see what we see here. I don't know if you answered this one. Taking into account the present situation, what do you think of the best carry trade? Did you?
Oh, right. No, I didn't. So I think that's a great question, and I've answered twofold. Number one, I never say that. I mean, the carry trade is a portfolio strategy. It's not a trade like I'm going to buy calls on the dollar CAD. It's not like that. So it's a portfolio strategy, which means that I'm very much strongly of the opinion that it has to be diversified. And diversifying the carry trade is just a matter of applying the principles behind it, which is what's your expensive currencies or on a yield basis versus your cheaper currencies. So you start looking at things like the yen versus higher yielding currencies. I mean, right now I would automatically kind of push this to the Aussie still, but I think that the second part of my answer would be I'm not a big fan of traders getting into the carry trade immediately because it's until volatility comes down. So what's the best carry trade pair? A diversified portfolio of them. So I try to have 5 or 6 pairs on at the same time. Is right now a good time to get into it? I don't know. I might wait for the market to turn the corner a little bit. I'd be looking for other high-risk assets to start performing better, like equities or see a weakening yen again. That would inevitably be a component of the carry trade portfolio, I think. So I'd like to see the market turn the corner a little bit before I got back in and try to find a good carry trade pair or combination of pairs.
Very interesting. Let's see if anybody has any more questions for John. Obviously, John has a wealth of knowledge, and you see what John brings. So you want to go to PFX because John is teaching not only fundamentals of, in fact, many people don't really, really learn a lot from what John has brought to us today, and of course there's a lot more, pfxglobal.com, but also the fact that he understands options as well as anyone else. So those two factors bridge together is something that most people don't really understand. They either understand one or the other. So please check it out, pfxglobal.com. Let's see if there are any other questions. John, I think that's about it. I just want to say thank you very, very much. It was really wonderful. I learn something every time that you come on because, again, I'm more from the equity options world, so I understand options world, but you know options and you know the currency market, so I'm really, really thrilled that you were able to make it today, and I really recommend that everyone go to www.pfxglobal.com to learn more about everything that John has. There's so many services. I've been there. There's a wealth of knowledge. Please check it out. John, thanks so much. I want to remind everyone that we're giving webinars on Sundays now, 7:30 Eastern, 4:30 Pacific here in the United States. And I'll be giving this week's presentation on correlated trades or non-correlated trades in the FX market. So please check it out. John, thanks so much for being with us today.
Thank you, Stu.
Take care now. On behalf of the International Securities Exchange, I want to say thank you to John, and I also want to thank all the attendees. Have a safe trading day tomorrow. On behalf of the International Securities Exchange, have a great night.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcast.